Good morning, this is Johann de Villiers with your monthly real estate Enigma, where we decipher the real estate market for the month of August 2022. We will be looking at the US market in general and then focus on Washington, California, Arizona, Colorado, Florida and Tennessee, all states where I am licensed to offer mortgages. These are the headlines for the month. The market continues to transition from favoring only sellers to a neutral stance with a bias towards buyers. Inventory has increased significantly from its lows in January 2022, but has a way to go. The rate of home price increases have slowed, with no real meaningful reductions in the June data. Pent-up demand from buyers frustrated with the earlier bidding wars seem to have supported these prices. Higher interest rates, more inventory, and the mortgage application levels at a 22-year low could limit buyers in the future. Please like this video, subscribe to our channel, and register for notifications for more interest rate and real estate news. When assessing the state of the real estate market, as any market, the mindset and the activity of both buyers and sellers would tend to determine the price and the activity in the market. Real estate is no different to that. In the case of sellers, we can look at the active listings as an indicator of how the sellers are perceiving this market. When it comes to the buyers, it becomes a little bit more difficult because there's no real stat saying how many buyers are out there. I would suggest, though, that the days on the market would be a good indicator of how aggressive buyers are closing in on their dream homes. That leaves us with the price. Now, this month we saw some headlines indicating that the housing market was in a recession. The next week, the same source said, well, the housing market is close or near the bottom. The next week, well, the housing prices can go down another 20%. So where are we? How do we determine what the prices are going to do, especially if we are looking at statistics that are at least 1, and in case of prices, 2 months old? Makes it a very difficult thing, and we have to be reminded that when it comes to forecasting, it can be a very tricky business, especially if it deals with the future. Now we will be looking more at the local markets so that you can get a flavor of what is happening in your backyard if you are in the market for a real estate transaction, either from the buy side or from the sell side. On a national basis, listings and thus inventory has increased significantly from a low in January 2022, reaching the average since 2019. The July days on the market has flattened out at 35, but remains well below the average since 2019 of 63 days. Home prices continued its upward march, well above the average since 2019. For the year since July 2021, inventory has increased by 31%, 83% from the low base a quarter ago, and 21% for the month. As for days on the market, on an annual basis, we are still 5% below July 2021, 3% up from 3 months ago, and 9% above June 2022. Prices are up 18% in June from a year ago. The price increase was 4.6% since March and slowed down to 0.6% from May. Listings in Washington are now well above the average since 2019. Days on the market remains well below the average. In Seattle, prices have taken a breather from the relentless upward march. Listings increased by 96% for the year, 180% for the quarter, and 29% for the month. Good news for prospective buyers. Days on the market remain 3% below a year ago, 16% above last quarter, and 26% above the June number. Prices for June were 19% higher than June 2021, only increased less than 1% for the quarter and actually went down 1.9% for the month. California listings have breached the average since 2019. Days on the market has recovered some, but remains below the 2019 average. The hot San Diego market, prices went to the beach in June. Inventory increased by 54% for the year, 102% for the quarter and 22% for the month. Days on the market are 7% above July 2021, 18.5% up from last quarter and 10% above the June number. Prices increased by a whopping 21.5% from June 2021, with an increase of 2% for the quarter, but declining 2/3 from May. In Arizona, sellers also seem to want to get a foot in the door, with inventory well above the average since 2019. In Phoenix, Mesa and Scottsdale area, days on the market had a slight move up from the lows, still well below the moving average. Phoenix, Arizona, the prices remained super hot. Inventory has increased by 127% since July 2021, 171% for the quarter and 30% for the month. Days on the market were 3% above July 2021, 11% above the quarter and 20% up for the month. Prices increased by nearly 27% for the year, 6% up for the quarter and 1% for the month. Strong prices in Arizona. Colorado sellers now also have more inventory on the market than its average since 2019. Days on the market remains fairly flat at the lows, well below the moving average. In Denver, the thin mountain air made prices breathe a little. Inventory increased by 59% for the year, 138% for the quarter and 29% for the month. Days on the market were 3.4% above July 2021, 15% up for the quarter and up 25% for the month. Annual price increase was 19%, up nearly 4% for a quarter and down just below last month's price. Florida has experienced increased inventory but remains below its average since 2019. Days on the market remains well below the average since 2019. In the sunshine-drenched Miami, the fun in the sun continued. Inventory in Florida had a 46% increase for the year, 95% for the quarter and 27% for the month. Days on the market are still down 16% from July 2021, but up 3% for the quarter and 6% for the month. Prices continued by increasing a massive 33% for the year, quarterly nearly 9% and monthly 2%. Well done, Florida. In Tennessee, active listings are above the average since 2019. With the days on the market, Tennessee is no exception, moving away from the lows, but still well below the average of 2019. Atlanta, Georgia, as a proxy for Tennessee, hopefully a somewhat accurate comparison, the upward march continues. Listings expanded with an annual increase of 77%, quarterly up 120% and monthly up 26%. Days on the market remain unchanged from a year ago, up 11% for the quarter and 7% for the month. Annually, prices increased by nearly 25%, quarterly 6% and monthly by more than 1%. Well done. Well, that was a mouthful. In conclusion, it seems as if a large number of buyers, having been frustrated by the bidding wars in 2021 and the first quarter of 2022, are now buying their dream homes. This is fueled by asking price reductions, and their buying power seems to support prices. The size of this pent-up demand cannot be calculated. Interest rate increases, the increase in inventory with the slowdown in both new home and existing home sales, and mortgage applications at a 22-year low would indicate some buyers' reluctance in coming to the dance that could manifest itself in the next 90 days or so. The market has significantly changed since January, no surprise there. By most calculations, we have transitioned from a runaway train seller's market to a more neutral market with a distinct bias towards buyers. If you are a seller, holding out for the last dollar may not be a great idea, and if you have your eye on your dream home, any weakness may be a great time to act. If you or anyone you know are in the market for a mortgage, please go to our website and get pre-qualified or apply to start the ball rolling. Please like this video, subscribe to our channel and click on the notify button so that you will not miss any real estate or interest rate information, our 2-minute drill looking at interest rates, and the real estate Enigma deciphering the real estate market. Have a great month.